Hello everyone, just a bit of a start of the week update. On Friday we saw a lot of people saying the stock market was down because of triple witching. I think that's a cover story for the fact that the market's just down. Triple witching can create intraday volatility, but it's not an excuse for an overall down move of the sort of degree to which we saw. Of course, if it was, we'll see a very quick recovery, and Mondays do tend to be bounce days, particularly during the Asian trading session of US futures. So today should see some strength. If we see the market make a new low later today in New York, then that's really troubling for the outlook on equities. Of course, driving the bearish sentiment is that US consumer confidence was down on Friday, and that's still languishing near the lows of COVID, but the economy is fully open and experiencing massive government spending. So why is consumer sentiment so crisis low, depression, recession type levels? It's because there's a lot going wrong in the US economy, and it's largely splitting in two. So the big end of town is doing well, but the great majority of people are indeed struggling. The other thing we've seen is US bond yields skyrocketing up towards previous highs and could continue, in fact. And the reason for this is that the US has to pay more for having a fiscal crisis. So if it wants to borrow money to fund like out of control spending, then like anyone, it has to pay a higher interest rate. That's why bond yields will go up. It has nothing to do with the Fed. We also saw last week that inflation data that I've spoken of before, which was the buy the dip opportunity that many of the bulls saw, and they did buy, but then it's ended in a situation where there was no follow through buying, and that's very troubling for the outlook for equities over coming weeks and months, in fact. So this Tuesday, Wednesday, Monday, Tuesday, Wednesday in New York trading, if you see the lows of Friday broken, particularly on a closing basis, it could be all over for the equity bull market. I mean, we're already seeing those AAAs, they were AAAs, the tech stocks really getting hammered. But again, I just want to emphasize the price action Monday, Tuesday, Wednesday, New York. If you get a lower close, be very concerned and protective of your investment portfolios. Gold and Bitcoin have both been rallying, but for very different reasons. I know the gold logo of Bitcoin is highly used, but that's about the only correlation there, as we all know. If you're a lover of Bitcoin, I just want to caution you that the halving in the mining, while it sort of creates scarcity, fear of missing out, and a lot of people have been buying for that reason, it's actually problematic in that the miners maintain your ledger. And if all the miners were to stop maintaining the ledger one day, Bitcoin is immediately zero, like overnight. But of course that won't happen. But with the halving of the mining, they need the Bitcoin price to double so they can still deal with the high costs of the mining activity, which is largely energy cost related. Of course, massive numbers of servers too, because you've got to remember they're reproducing the ledger. So they need to be profitable, or you get all sorts of things happening. I mean, one of the offsets for that, of course, is to start charging fees for using Bitcoin. You can buy a coffee in Amsterdam for $4, but the fee will be $16 cup of coffee. So I'm still cautious of Bitcoin overall, but it is the greatest spec show on earth. In other words, if you just want to play a speculative game, it's Bitcoin. Definitely. It has better odds than the casino. But don't think it isn't prone to problems in the months and years ahead. EVs, just going to go over them quickly again. Why am I not happy with EVs? Well, the cost to the planet, the mining, the toxicity is extreme. Also, most EVs are getting plugged into the general power supply, and around the world, the general power supply still uses fossil fuels, which means EVs are actually burning fossil fuels at 2 to 5 times the rate of fuel-efficient petrol engine cars. So it's worse for CO2 emission, way worse. Of course, if you're going to buy an EV, buy a Tesla, because at least you get the power generation and storage system, one complete package. That's, if you're going to buy an EV, you want that independent power supply and those batteries that Tesla provides so very well. But, taxpayers are burdening the cost of EV subsidies. They're also bearing the cost of all these, electric vehicle fires, where firemen have already experienced chronic illnesses that they will never be free of. So for the rest of their life, they're going to suffer serious disabilities from having attended these EV fires because of the toxicity of the smoke that is emitted, which of course probably equals 1,000 petrol cars over the next 10 years. And also, households in general, electricity costs. Do you know that an EV uses about 10 times the power of a home, the average home, in one day? So that means if everyone had 2 EVs, you'd need 20 times the power supply. That's driving up, well, let's just say 1 EV, then that's 10 times the current power production required, and a lot of infrastructure to build the cables that can carry that much power. So it's driving up household energy costs, driving up energy costs for businesses completely. But EVs, if the technology can be refined further, could be a way to go. But then you have diesel buses already on the roads in Denmark. I know I've spoken of some of these things before, but I'm just kind of doing a total wrap. And they're running on virtually zero CO2 emissions because of the new technology they're using in their buffers, which only have to be replaced every 6 years and are cheap to replace as opposed to the electric batteries of EVs, which you probably will cost you more than the value of the car to replace. So that's incredible wastage. So anyway, that's EVs. If you're going to buy one, maybe think about a Tesla, but don't drive through floodwaters because they work really well in floodwaters because petrol cars, the exhaust problem in floodwaters. But EVs don't have that problem. The only problem with the EVs is 3 to 6 weeks later, you may experience corrosion, which creates a short and your EV bursts in flames. Other than that, they're great in floodwaters. And of course, we know they have trouble starting in the cold, as recently experienced. So I think diesel, no CO2 emissions, or the new hydrogen cars that VW and BMW are already road testing fleets thereof in Europe. So there's a lot of technology threats to the whole EV outlook, which is why some of those EV stocks are down as much as they are. I guess what else should we look at? Tesla. Someone mentioned Australian banks. So Australian banks, let's play. I think the name of the game is Whack-A-Mole. Just like they're all popping up, just hit them on the head. I think Macquarie Bank put out a report along the lines of the major banks may be fully or overpriced. That might be a way of shifting focus away from the Macquarie stock. But all the banks in Australia they've had a bit of a bad run lately. They made new highs, and those new highs were just whack-a-moled, new word, to the downside. So I'd be very careful about that, and that's what's affecting the Australian stock market outlook, which looks even more bearish than the US stock market outlook at this point. Now, if I am wrong, the US stock market's going to gain traction today. It often does on Mondays, so don't necessarily take that as an indication that we're in the all clear. But if that persists into Tuesday and Wednesday, then this might be a sideways consolidation section in the US stock market, which is a great buying opportunity for the longer term. I'd just be very cautious at the start of the week. I hope that helps. US dollar remains chaotic, problematic. I mean, basically, you sell it because of the fiscal crisis, but you buy it because the higher yield bonds prices down, yields up, the higher yields created by that fiscal crisis, and geopolitical risks, which are growing in Europe, by the way. They're not dissipating, they're intensifying, so be aware of that as well. I hope you have a really good week. Don't forget to check out my website, cliffordbennett.com.au, for free stuff. Yes, get free reports there. And I hope it's interesting. It's kind of economic analysis with attitude, but I'm really here to help traders, individual traders and investors do well in the marketplace because it's not easy. Okay, have a great week. Thanks very much. Cheers.